Hello traders, welcome back to the channel. We're doing another analysis this week, and this week we're being hit with CPI news release. So if you're willing to figure out a little bit more about the CPI itself, how to navigate this upcoming week, stay tuned. I'm Ignas, coming at you from Daily Pips Training. Very much hoping that you're gonna enjoy the analysis itself, you're gonna find it insightful, and if you do, please don't forget to leave a like to the video itself. We very much appreciate when you guys do that. Let's dive in. I would like to start with the weekly calendar itself because Wednesday is CPI news release. During the release, a lot of liquidity is being released into the market itself, a lot of manipulation happens, and a lot of unexpected movement comes into the marketplace. Is it predictable? Is it tradable? Not really. But what we can do, knowing the fact that CPI is releasing itself, we can schedule our week to be very efficient in terms of taking risk on and taking risk off itself. For the upcoming week, I'm not looking to trade up until the CPI releases on Wednesday itself, because Monday has no economic drivers that are coming into the market. It has no red folder news, so Mondays like that we're not trading overall. Tuesday, I think a little bit of consolidation will continue up until the point where CPI releases at 8:30 a.m. New York time, and everything that happens afterwards is our time to shine. Our time to shine, our time to catch the orders, our time to figure out where the market is gonna draw towards to when the real move of the week is happening. So, first part of the week, no trading for us. CPI comes out at 8:30 on Wednesday, and the Wednesday afternoon and Thursday, Friday trading, I'm gonna have a little bit of fun. And I'm gonna hope you're gonna enjoy that too. So, coming to bonds itself, we're looking at the bonds market, and I'm quite interested in the bonds still going higher, but we have to keep in fact that the bonds are retracing right now. Buy stops on the cash index right here have been taken. Keep that in mind, and do consider the fact itself that the bonds are retracing not only into this daily level here, we have a weekly level right here also. So retracement into it, push higher. That's my expectation. Can we immediately start going lower? Not really, because this level has to be broken. I'm gonna have to give the whole week for that to happen. So yes, liquidity resting below, but that liquidity is my interest only if that level of the daily imbalance and weekly imbalance itself gets broken. Going forwards with dollar index itself, for dollar we're watching this daily, and not only daily, weekly imbalance out here being attacked. Right? Is my expectation to see a draw on liquidity going higher or lower? To be fair, if bonds itself, just like we watched it, retrace into that daily level and continues higher, I would be very happy to see dollar retracing into this range and continuously going lower. My expectation itself, yes, this could be a swing high, but my expectation overall is for the prices to continue lower. I would love to see that, but I can't say throughout the week when are we gonna get the real move happening itself. I would very much appreciate if the market goes lower for the second part of the week. Thus, we could be finding some trading possibilities. At the same time, if this inverts, we know the drill. Just like we inverted that weekly level lower, inversion right here to the upside means we're chasing higher prices immediately out here. Euro so far is delivering brilliantly. We called for the market to push towards these buy stops resting above. Now the next liquidity pool is resting at 11,395. I have this daily imbalance marked off, and bouncing away from this is a little bit iffy for me. I would love the market to continuously push higher, but if we don't, only and if we go below this daily fair value gap itself, I'm gonna be interested in sell side resting below. GBP on the other hand is looking a little bit more interesting. Swing low has been created, so push to the upside is very reasonable, and I wanna see that happening also, but we have to consider still this double bottom resting below. So here I would very much hope that the market will continuously push higher away from this, basically without any retracement. So early into the week, I would very much be interested in going for longs on GBP USD pair. And for the second part of the week, if you're looking to trade forex, try to take a look at the euro. Try to take a look at euro, whether that daily imbalance is still holding in the price or not. Looking at indices itself, I'm still happy with what I see. We called for the weekly level to hold in the price, at least for a little while, and we called for the market to push inside this daily imbalance. I'm watching it right now. I would love 50% of it to hold in the price and to allow it to crash onwards. Only and if only we go through here, which is around 50 5,444 and 3/4, only then I'm interested in higher prices and all-time highs again. Summer doldrums are still here. We're looking for lower prices throughout summer, so my interest still continues, my eyesight towards 5,020, so everything below this daily imbalance itself is going to be bearish for me. Nasdaq is still doing its work. I'm happy with what I see, and I'm happy with this order block, hopefully holding in the price. So my expectation for this upcoming week is to push towards here and bounce away from it. Why? Because we have a double bottom resting down below. Double bottoms like this never stay in the market itself, and only and if when does an order block doesn't hold the price is that if we go below this 50% level of it, my interest becomes bullish. Okay, a double bottom like this never holds in the price, and I would be still expecting for the market to rush through it. This order block is my interest right now to hold in the price and allow it to push lower. So the only question remaining now when the order block might be failing. So the order block itself fails only and if only it gets pushed through the 50% level of it. So everything below, let's take a look real quick, around 19,250 is still bearish for me. Keep that in mind. And for now, I very much you guys enjoyed the analysis itself. We put a lot of effort into this, so don't forget to leave a like to the video itself if you don't mind, and if you're just coming through, subscribe to the channel itself. And if you want more daily insight into what we do, analyze the price itself, we do this daily on Discord, so Discord link is in description down below. See you there. Bye.